What do you think retail investors should do to stay in the long-term game of crypto without sacrificing mental health? Okay, that's a bloody good question. Buy it and don't look at your P&L. And buy the sell-offs. I actually distance myself. I've got hourly charts on the bloody screen. I don't trade hourly. I haven't traded crypto for ages. I just buy it, store it, and occasionally I make an asset allocation switch. I'll switch out of one thing and buy some Matic, for example. And then I'll just sit for months at end without doing anything. And what you need to do is just don't open your ledger and look at your P&L. Be involved in the drama of the markets. Don't be involved in the drama of your P&L. If your time horizon is 10 years, it makes no difference what it does this week, next week, this month, this year. But if it gets down to really oversold levels, then you should be trying to add. So that's what I think about that one.
FTX, the three letters on everyone's lips in recent days. For those active in the crypto space, it has been a shattering blow as a tumultuous year for crypto nears an end. The repercussions are severe, with over 1 million people and businesses owed money following the collapse of the crypto exchange, according to bankruptcy filings. With investigations into the collapse ongoing, it will certainly push forward regulatory changes either via lawmakers or through federal agencies. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul updates his thoughts on the Bitcoin ecosystem following the FTX collapse, along with his thoughts on Ethereum, Solana, and Polygon Matic. Raoul also speaks about the recession, growth falling, and its impact on the crypto markets.
I bought call options thinking that the chart pattern of Ethereum following the Bitcoin pattern from the previous cycle might play out. Those call options were 5% of my risk. That bet was wrong. I've made millions of wrong bets in my life, and I will continue to make millions of wrong bets. Over time, I've been a lot more right than I'm wrong. And I got that one wrong. And I explained when I did it that it was in options and I had defined risk. So 20,000 ETH didn't work out. Can it get to 20,000 in the future? Yeah, I'm pretty sure of it. So that's what it is. Thank you for that utterly useless question.
The FTX collapse has created a sense of uncertainty among large and retail investors alike, who are not very sure whether they should keep their funds on centralized exchanges or not.
Yes, growth is going to fall, and yes, we're probably going to recession. And yes, that is good for crypto markets because yes, that means interest rates aren't going to rise as much and even fall, and liquidity comes in to bolster the economy eventually. So I think the markets are forward looking, and therefore growth is a net positive. Falling growth is a net positive.
In other DeFi news, crypto scammers are actively using black market identities to avoid detection. DeFi protocol 1inch is looking to optimize gas costs with its new V5 router. The DeFi market, like the rest of the crypto market, is still recovering from the turmoil in the aftermath of the FTX collapse.
It's either mainly priced in or nobody can short the market. Who else is left to sell? Most of the people are kind of diamond handers right now. Most people got flushed out in June. So I'm actually not that bearish, but I'm open to the possibility there's more downside. I'm pretty sanguine because my time horizon is much longer term. So I expect machinations like this. I expect 80% drawdowns. I've had them in the past several times. I'm kind of used to it. And remember, once you put it on a log scale, those drawdowns never go to the previous low because we've got an exponential uptrend over time. So, it's really a long-term game. I'm not a short-term trader, so I can't really help with the short-term side of it. I think it's dangerous in an 80-vol market unless you really know what you're doing to be a short-term trader. But be a long-term trader, these kind of points are really interesting.
A week after the fallout from the FTX and Alameda chaos, some on-chain data points are interesting to observe. Although record amounts of Bitcoin and Ether, or ETH, are leaving the exchanges, not all dApps and protocols have shown growth, mainly due to the reliance on FTX and Alameda.
What will have to happen in order for Bitcoin and Ethereum to basically die? Which is a slightly bizarre question. I don't think they can die. Can interest die over time so you end up with a smaller pool of users? Well, we haven't seen much evidence of that. If I look at the Metcalfe's law models, these networks haven't really grown a lot since 2021. maybe even the end of 2020, and that's to be expected. But for them to die, we need all of Web3 to stop developing and the exponential trend of adoption to entirely stop. And I think that's just highly unlikely. So I just don't see it.
Combined with a migration away from centralized exchanges or CEXs, the volatile crypto market has users trading in record numbers. According to data from Token Terminal, the daily trading volume of perpetual exchanges reached $5 billion, which is the highest daily trading volume since the Terra Luna and Terra USD or UST meltdown in May 2022.
24% is still held in exchanges. That's crazy. It is, but not all exchanges are going to zero. I mean, people like Coinbase run really good exchanges. I'm pretty confident of places like Kraken. Now, you can't be 100% confident in anything, but Kraken run a pretty conservative business model. And so several exchanges do. So don't assume every exchange is terrible. We've seen it in financial markets. Not every bank is terrible. Not every brokerage house is terrible. But Christ, we've seen banks and brokerage houses go bust. We've seen hedge funds go bust. Not every hedge fund is terrible. So don't throw the baby out with the bathwater. Just realize that in FTX, there was bad management and fraud. And that deserved to go under. It did not deserve to take people's money with it. And it's horrific. And as I said, I got caught out in MF Global in the futures brokers market with something like that too.
The shockwaves from FTX's historic collapse are still being felt across the industry today. But some industry segments like DeFi are actually doing better because of it.
Liquidity is being drawn out of all financial markets. Anybody swimming naked will be shown up as the tide goes out. It's as simple as that. It's as old as the leverage cycle. Humans love sex and they love leverage almost equally. It's ridiculous, but that's what they do. Even though crypto has Bitcoin itself performs at about 140-50% a year through the cycles, and yet people still want to take leverage on that because they think it's not enough money. It's ludicrous, but I can't help it. It's a degen market. And I also understand that people want to do something with YOLOing because people are disadvantaged in the financial world. They can't get access to products and markets, and crypto gives them access to like early stage VC style technology investments that have exponential upside. I really understand why people get involved, but I don't see many VC people using leverage in VC because these things are fucking volatile. So just be careful out there. Anybody who's been around this space for a while and seen bankruptcies happen is the reason I got into crypto in the first place was because I went through the financial crisis and nobody knew who owned what in the banking system. So when Lehman went under, it was a big mess of trying to figure out who the hell owns what. Then in Europe, Cyprus, the banks went under, and in Spain, we had some bank failures too. And what happened is in Cyprus, they bailed in the depositors, which means you were just happily leaving your money on deposit in the Cyprus bank, and they take it and say, well, it's actually our money now. You don't own it. In Spain, they did something even ruder. Well, I don't know if it's even ruder, but more Machiavellian. They told savers, hey, listen, we can give you higher rates of savings on these things on this account. That account was preference shares. And then they defaulted on the preference shares as the banks went under. It was criminal, but they didn't get prosecuted for that. So this kind of shit happens all the time. And I saw that. And when I saw blockchain, I realized that you could self-custody, own your assets outside of the financial system and nobody could touch them. That is the key thing about the crypto markets that make them different. Every time you go closer to what the traditional financial market looks like, you are adding on risk. Custodying Bitcoin, Ethereum in your own ledger device or Trezor device is as low risk as you're going to get. Now, obviously, there's all the password elements and remembering your seed phrase, all of that, but it's then down to you. You are responsible for your own money. I like a world where we're responsible for our own money. Like I'm responsible for my own car, my own house. Somebody else isn't responsible. Why should I do that with my crypto or my money? And so I think it's a really important thing. Now, Of course, we all need to use exchanges. So what do we do? You do your trading on exchange, you buy and sell what you want, you take it off the exchange. That's it.
So, do you agree with Raoul Paul that recession and growth falling is good for crypto markets? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.